hot stocks burning out today as what's been a bad month gets even worse. JP Morgan reportedly telling its prime brokers it will no longer allow them to buy and sell shares of some U.S.-based cannabis companies.
JP Morgan and even Credit Suisse, who I think are going to be on the wrong side of history on this. For investors, the good news is you're investing now in a sector before a wall of institutional capital can get in. This is potentially a $100 billion sector in less than 5 years. And I think investors that are understanding where you can get growth at a reasonable price, you know, the cannabis as a sector, as a growth sector, is trading at a significant discount to sectors that don't offer this kind of growth. So frustrating.
Hey everybody, Mo here. Today we're talking about US brokerages and how their decisions affect us. Illinois' October sales, which were released yesterday. News on New York's recreational market, and a few other things as well. Welcome to the Wednesday, November 3rd edition of Mary Jane Markets. This is a show covering the developing news of the North American cannabis sector every Monday, Wednesday, and Friday. I also cover a few of the operators: Cresco Labs, Curaleaf, Thumb Industries, and Trulieve. The goal here is to do all of the due diligence I normally do as an investor in these companies, and then provide that to you in a concise episode so you can stay updated. A quick check-in with the markets before we dive into things. Another couple of days here where we slip lower going into Q3 earnings next week. Part of that might be explained as fresh price targets and ratings were released over the last few days. That's against the backdrop of the major indices spiking. You can see that in the last two charts of the S&P 500 and NASDAQ there. Due to the FOMC meeting, which concluded today, with the Fed announcing that they're holding rates where they are, but are starting to ease off their asset purchases. So we saw a jump in yields, as well as the market reacting favorably to the news that a rate hike will be coming later rather than sooner. The biggest reason for their decision are the unemployment numbers, which are still higher than desired. Shifting over to the sector commentary segment, I want to start off with the news making big waves the last couple of days. That is, JP Morgan Chase informing its prime brokerage clients that going forward from November 8th, they'll no longer be allowed to purchase cannabis-related stocks and securities. They will still allow their clients to hold positions they already own, but will do so by opening an additional account and transferring the positions to segregate these securities from other client assets. Who this affects? Prime brokerage clients are typically large institutions, family offices, hedge funds. Those kind of whales are offered those services. Reuters is reporting the reason behind this. JP Morgan has introduced a framework that is designed to comply with US money laundering laws and regulations by restricting certain activities in the securities of US Mary Jane related businesses. The restrictions apply to companies with US operations that are not listed on the NASDAQ, the NYSE, or the TSE, and have a direct nexus to Mary Jane related activities. This isn't the first time a bank has done this. MJ Biz Daily, which covered the event, had a nice callback to May of this year when Credit Suisse took the same action. It's also reminding some of us when BNY's Pershing clearing, custody, and settlement business stopped servicing these types of securities. BNY Pershing is the world's largest custodian of financial assets. And for those that are newer to investing, this has to do with the complicated inner workings of the financial world. Using Investopedia's definition, a custodian or custodian bank is a financial institution that holds customers' securities for safekeeping. And why does this matter? Well, per the SEC-registered investment advisors who have custody of their clients' funds or securities must safeguard those funds as required by the SEC's custody rule. Included in that rule is use of qualified custodians to hold client assets. Well, that's a pickle. If you're required to use qualified custodians to hold these securities, but these custodians, like Pershing, say they won't hold the securities, well then, to comply with the rules set by the SEC, you can't make those available to your clients to purchase and hold. And many point to that decision from Pershing and others as being the reason institutional ownership in this sector is so low at just 4%. This custody plumbing problem is also something Curaleaf chairman acknowledges in his Reddit AMA, that if rectified, it could give trillions of dollars of institutional capital access to US operators. Now, the reason behind JP Morgan's decision is different, but this shift has been the trend from large financial institutions who do not want to toe the line when it comes to federal illegality. When it comes to things like this, it's in their nature to err on the side of caution and wait for the regulation to be written. This is why you may see differing opinions on if this bill or that bill, like SAFE, will allow uplisting of US operators to US exchanges. So take those opinions with a grain of salt and be aware that financial institutions might take a wait-and-see approach on this. From everything we've seen from them thus far, including this JP Morgan news, they certainly seem to not want to take the risk and be on the wrong side of this. If I were to boil this down to why you as an investor should care about any of this, the US financial markets are the major leagues. This is where the big boys play. Allowing the US operators into this market means better liquidity, it means better price discovery, it means more derivatives, more ETFs. more access for retail investors, more institutional money coming in, and a huge value unlock for these companies. Moving on to our next topic, yesterday Illinois published its October adult use sales figures, coming in right around $123.4 million, up 64% year over year, or 1.3% over last month, about half of that coming from out of state. Unit sales have also ticked up more month over month than what we saw in September. This is the strongest month since July, with that peak being attributed to the summer season and festivals in the city of Chicago. Those of you who have been watching for the last few months know that I've been paying close attention to prices, so we'll look at those quickly. If we compare this month with the peak in July, you'll see that unit sales decreased by 1.6%, but sales in dollars terms fell 3.5%, which implies that the average price per item is dropping. Some quick math dividing the sales total with items sold tells us that the average price per item in the month of September was $44.74, which has been decreasing over the last few months following the trend we've been seeing across the nation. Though I would say pricing power in Illinois has held up better than most states we've looked at. This is why you hear operators call these limited license states attractive. This month also marks the crossing of $1 billion in sales in the rec market and exceeding all of 2020's sales, which came in at just over $1 billion. So if we assume another $120 million each for October, November, and December, we could close at $1.5 billion this year, which would be a 50% year-over-year increase. And that's just the rec market. If we throw in the smaller medicinal market too, which I always forget to cover because the numbers are delayed by a month, you could optimistically add another $400 million on top of that. So yeah, a very attractive market. Before we move on to our next topic, I want to remind you again that there are three forces dragging this market down a bit. I hope some of you aren't getting annoyed that I keep repeating this stuff, but it serves a dual purpose. One, I'm a small channel, so hopefully most of the people viewing this video are new, so they're hearing it for the first time. And two, by repeating this stuff enough, hopefully it sticks in all of our minds and we're able to recall it in other contexts. So those three forces being high prices, high taxes, both of which lead to a lower conversion of illicit consumers to the legal market. Remember that episode where we analyzed why Arizona's market is having such a stellar year? I'll link that below for any new viewers. And the third reason is I'm missing 185 dispensaries from the lotteries that took place over the summer, which we expected to have opened this year but haven't because of those lawsuits that we talked about in the last episode. So those are things to keep in mind when you see growth in the state flattening out. Moving on, but keeping with our sales topic, you may have seen a couple of articles highlighting the sales slump we've seen this year across the country. It's something we've talked about a few times now. We definitely have to acknowledge that 2020 boosted sales, possibly artificially, and so year-over-year numbers don't look stellar, especially in markets that are relatively more mature. Like of these 5 here in MJ Biz Daily's article from yesterday, reporting on this trend, I think Nevada is the youngest market with rec sales coming online back in 2017. If I wrote an article and picked states like Illinois, Arizona, or Florida, I could put a very different spin on things. I'm not trying to disparage this article at all, just trying to make a point once again that we have to look at each market for what it is. And for these markets in particular, this is what's playing out. And really all I have to say on the topic is to take a broader view of things. If you take 2020's abnormal sales out of here, for every month in each of these states, sales have exceeded that of 2019's. I hope I'm not coming across as one of those types of people that attacks every seemingly negative thing as FUD, but I feel like I needed to balance out what I was seeing out there. Shifting over to government policy updates, we're getting some disappointing news coming out of New York, where Tremaine Wright, chair of the Cannabis Control Board, said during a Cannabis symposium in Rochester that the board is working on an 18-month timeline to create the adult use policies for the state. She's quoted as saying in the Rochester City newspaper, "What we do control is getting dispensaries licensing and giving them all of the tools so they can work within our system. That's what we are saying will be achieved in 18 months. Not that they're open, not that they'll be full-blown operations, because we don't know that. So by the middle of 2023 is when they expect to be done with just crafting the rules. And then this implies that following this is when they'll begin the process of actually getting dispensaries open. What more is there to say? How supremely disappointing on so many levels." Just want to hit a couple of quick things here before closing out the episode. A kind of interesting thing to see from Cresco, the company announcing today they'll be holding an educational panel discussion for the lottery winners in Illinois. This seems like a good way to start educating them on Cresco's wholesale business and start building those business relationships, something the company's acutely focused on. Also, a quick shout out to Cresco Labs and Curaleaf for making Inc.'s 2021 Best Led Companies. They came in at number 74 and 139 respectively. Kind of an interesting list though if you want to check it out. Personally, I don't much care about these things, so it doesn't affect my opinion on these companies or the companies that were left off. Alright, that is it for today. Thank you for listening. I hope you all have been hodling sanely through 2021. On a programming note, looking ahead to Q3 earnings, I think I'll be lucky if I get even one of those company-specific episodes out. I am working on them, but editing these videos just takes a deceptively long amount of time. But we will be looking at earnings more in depth this quarter than we did last. Anyway, if you want to reach out to me, the best place to do that is on Twitter. My handle is @MJMarkets. If you're liking the content, please give a thumbs up, subscribe, hit that notification bell. And what would help me out the most is if you shared this out with like-minded investors. Thanks, and talk to you soon.